I mean, hey, if you ask me, do I want a sharp kick in the face or a 15% tariff? 15% tariff, please.
This is Openwork, a look inside the watch industry, a podcast from Collective Horology. I'm Gabe Riley, co-founder of Collective.
And I'm Asher Rapkin, co-founder of Collective. Collective Horology is an independent watch retailer based in Southern California. We carry a wide range of independent brands, including Sartori VR, Speak Marine, Renault Tixier, and more. To learn more about us and check out our available inventory, visit collectivehorology.com.
Yeah, Renault Tixier. Well, first of all, I had a little fun with the intro there. All of those brands have two names in them. It's depressing that I find that entertaining. In any event, but Renault Tixier, no coincidence that we ended on them, because we not only brought Renault Tixier into the shop this year, which, by the way, is one of those like horological pinch me moments to have watches from Dominic Renault in our shop to be able to represent his work together with Julien Tixier is amazing and quite an honor. And I think we mentioned on the last podcast, we started a new YouTube video series called The Watches Of. And each one of those videos focuses on, well, the watches of a different maker. So we've done a couple of videos, one on Holthenricks, and then most recently one on Renault Tixier. And it's an interesting format. It's kind of a hybrid almost between like a podcast and a more traditional product video we do. So it's conversational, but there's a ton of hands-on product content in there as well. So if you're curious to see what the watch looks like and to get, sight, sound, and motion when it comes to these makers and what they're creating, that's there. So check out the Watches Of video series, including the latest video on Renault Tixier at either collectivehorology.com or on our YouTube channel. But enough about watch brands with two names in them. Today we're talking about some industry updates and news. And as usual these days, there is a lot to talk about, starting with tariffs. And actually what we have here is some real news around tariffs. So as we've mentioned in the past, back on November 15th, the Swiss government, or November 14th, the Swiss government and the U.S. government agreed on a trade deal. And then we waited for a month, more than a month, for a new 15% tariff rate to actually take effect. In fact, there was some reporting, I think last week or earlier, that from on the Swiss side, they had made an announcement saying that the new rate was in effect and retroactive until November 14th. Well, it wasn't actually in effect. One thing that's important to note is when we're talking about U.S. tariffs, this is a change that the U.S. government needs to make. And there are certain procedural steps they need to go through to implement the new tariff rate. And as of today, December 18th, in fact, today, those new tariff rates are actually in effect. So if you have a watch that is coming in and is being cleared for customs by a customs broker, whether that's an actual customs broker or UPS or FedEx or whomever is handling that for you, the new rate will be assessed today. Now, if that watch came in earlier this week or yesterday or the day before that, it would have been assessed at that 39% rate, even though this was supposed to be retroactive, because of course the U.S. government didn't switch that over or change that over officially in their customs tool, which is called ACE. This is what all customs brokers use to file the right rates. So what does this mean? Well, if you have a watch that shipped November 14th or later, technically, you should be entitled to the lower rate retroactively, but you'll have to go through a process to get that. So you'll probably be will be billed, others will be billed at that 39% rate, and then we need to do what's called like a post-summary correction to basically appeal that rate, and that can take months.
Why are all the worst things called PSC?
Yeah, I don't know. But the good news is, from this day forward, if you're ordering a watch or someone is sending a watch into the United States and it's of Swiss origin, it is at that 39% rate. If it falls under that transitional period of November 14th to essentially December 17th, you're technically entitled to a prorated refund on the difference, but good luck getting it. It's going to be it's a painful labyrinth you need to run. So that's material news. That's exciting. I know we're excited when we saw that actually hit in the customs tools. We were thrilled to finally see it.
Yeah. So there's two things. The first is on the strategy side for the Swiss. It took 34 days from the agreement in Washington on the 14th to the actual implementation of the lower tariff on, well, a couple hours ago. And I think it was actually kind of bold move by the Swiss to do what they did last week, which was essentially force Washington's hand. I don't know what the machinations were on the back end, and it's easy to quarterback this and say, how hard could it be to update a tariff? You know, the cynic in me says, didn't take them very long to raise them, so it's kind of shocking that it took them this long to lower them.
Yeah, when the rates were lowered on Japan, the EU, and other countries, it was done effectively overnight.
Yeah.
And yet, for whatever reason, the U.S. government dragged their heels for over a month on this one.
And I could sit here and make guesses about that. I'm sure you could too. But regardless, that's what it took. It took 34 days. And I think the Swiss, by going out into the market and basically saying, okay, it's in effect now, and it's retroactive and all of these things, was a bold move, putting pressure on the U.S. Trade Representative's office, who is the one responsible for this, to take some action. And we'll never, unless we hear from someone inside the USTR office or something to that effect, we won't really know if that's what did it. But I have to imagine it did, because if you want to be super cynical about it, Washington got the press out of it, and they didn't have to lower the tariff for 34 days.
So you're saying, some people in the industry viewed the Swiss making this statement as something of a blunder, and we're basically saying, well, the Swiss have no authority to announce a U.S. tariff rate change. But it sounds like, one working theory
the Swiss don't have the authority to do it. But
the working theory is they're doing this to sort of put some pressure and create some urgency.
They put it back into the news cycle. So that's kind of what I think they did, to which I say thank you. And I hope that's the case. Regardless, whatever the backstory is, hopefully that will come out. If anyone here knows and wants to tell us, we'd love to know. But regardless, we are in fact at 15%.
All right, next story, and I think these two are related, is we're starting to get some numbers on what's going on in the U.S. watch market for the year. And this was something you pointed out to me earlier, which was it's going to take a while for us to really see the numbers of how the tariffs and this policy have affected the watch market, because, of course, in months prior, we've seen a surge in imports into the U.S. And so that sort of pulled forward a lot of demand, or sort of juiced the numbers for the U.S. market for the year, and conversely may have lowered numbers for other export markets from Switzerland, because deliveries may have been moved from one market into the U.S. to get things in before different tariff deadlines. But now, to your point, we're starting to see the effects of this tariff policy on the U.S. market more broadly. What are we seeing?
A lot. So Swiss watch exports to the U.S. have dropped by, and I had to double check this because it's a staggering number, have dropped by roughly 50% in the most recently reported month, with overall global exports down about 7% for November, marginally negative to date. This makes 2025 in aggregate one of the most challenging years for watchmaking in general in the post-COVID era. Now, I think
the number I saw for year-to-date decline year-over-year 2024 versus 2025 was 2.2%. Now, that doesn't sound so bad, but keep in mind, this is a watch market that has been booming, the U.S. market. It's been booming for the Swiss. They depend on it. Other markets are sagging. So to be flat or down to 2.2% year over year, that's not good news for the industry.
No. Now, there's a lot of factors that go into this. It's not just one thing. Like with everything, and we've talked about this on a few other pods, but like everything, the tariffs create cascading issues. And those cascading issues are starting to appear in these top line numbers. So when watch shipments into a country are delayed due to questions around tariff implementation, when costs and currency fluctuations make meaningful impacts on end user pricing, that makes its way down the chain to retailers, to wholesalers, to agents, to brands, and ultimately to suppliers. And that is being reflected both in the Swiss economy at the moment and also in some of these top line numbers. So if we really, really zoom out to a macro here, or macro level here, there's a couple of key things that I would take away from this. The first is good news to see tariff relief. 39% was oppressive. 15% is more in line with what the rest of the European nations are paying. So it's good to see that adjustment. That said, that's not the only thing going on here, because the application of the so-called reciprocal tariffs by the American government also has had a negative impact on a number of other elements of the financial market, not least of which being currency exchange. So it's never just an issue of like tariff relief is going to be the only thing that's going to affect pricing. I wish that were so. Because these tariffs caused a depression of the US dollar, it has become meaningfully more expensive by 10 to 20%, depending on where you're buying from, to buy watches at wholesale pricing, even if the pricing in Swiss francs or euros or what have you has stayed the same. So this is some degree of relief, 100%. Don't get me wrong. But it's not the only thing causing these challenges. So that's number one. The other thing,
for context on the currency thing, this is really the insidious aspect of this that no one is talking about. When we started in this business buying watches from Switzerland, the Swiss franc and the dollar were basically about one to one. You know,
1 to 1.05, 1.09, similar to like the euro last year.
But it was very close. And when someone would tell you like, oh, this watch is going to be 10,000 Swiss francs, that was like, okay, it's just over $10,000 roughly. Now it's 1.25 to 1. So you have to spend 1.25 US dollars to get to a Swiss franc. So that's a 25% cost increase right there.
Right. So if a 10,000 Swiss franc
That's
watch
worse than a 15% tariff, actually.
Exactly. So if I'm buying a 10,000 Swiss franc watch, I might have paid $10,600 for it a couple of, prior to April. Now I'm paying $10,250 for it.
No, you're paying
$12,000.
$12,250. So the currency,
for it.
That's why it's this really insidious thing. It kind of happens in the background. No one really talks about it. The tariffs grab the headlines. The tariffs come, the tariffs go. They ease, they moderate. But the currency exchange rate is still at least for recent memory at a high.
And then not to harp on this, but the other side of it is going down the supply chain. Here's what I mean by that. Let's say that you are a dial maker, case maker, bracelet maker, something like that, okay? Maybe previously you were taking a 50% deposit on order and then 50% on delivery for the watch company that ordered from you. You may be seeing some of your orders dry up. You may be seeing some of your clients not paying on their terms, et cetera. So you may be changing your terms and saying, I need 100% up front. Well, if 100% is due up front, that's going to start rolling down the supply chain line. And when capital is being tied up, it becomes more expensive. And when it becomes more expensive, that puts pressure on the entire ecosystem. So my point in all of this is to say, top line, this is a good change. Something had to give here, 15%. I cannot express how much better that is than 39%. But the numbers that we're seeing here are reflective of an erratic business environment. And that erratic business environment, which is by definition unpredictable, is creating all manner of second order and third order challenges, which are still putting financial pressure on the business. So difficult to say where we're going to net out on that in the next few months. But I mean, hey, if you ask me, do I want a sharp kick in the face or a 15% tariff? 15% tariff, please.
All right. Well, we'll see where this goes. I suspect at the end of this year, a lot of brands held on shipments waiting for that tariff rate to go down from 39 to 15. So I know, like, for instance, we had some brands. Now, I'll start by saying for anyone who pre-ordered a watch from us, regardless of what the tariff rate was, the watch is shipped. And we have watches, we had some large orders that shipped last week under the 39% tariff regime because those watches are owed to clients on a timeline. But we and brands on watches that were intended for stock intentionally held some things back that we had ordered because there's no point in shipping a watch at a higher tariff rate when a lower one is around the corner. So I suspect a little bit of what happened here is some brands, some distributors, some retailers held on some deliveries in this 1 month window. And we'll see again, the pigs start to move through the python with this new rate in place. And we may see another surge in watch exports to the U.S.
Through the python.
Oh, yeah. I never heard that one.
No, that's a new one.
So we may see that again at the end of December and probably, frankly, in January, because I know a lot of brands are closed now for the holidays. So the saga continues. The numbers will play out. I suspect we'll probably end the year just down a couple percentage points for the U.S. market. But not everyone is down. In fact, some brands are doing well, and there's some real surprises in some recent financial reports from brands around who's doing well. I think we've seen this. We saw this when we were in Switzerland for the GPHG as well, which is kind of our next story here, which is the rise of LVMH as a watchmaking power. Now, obviously, LVMH, that as a group, is widely diversified in luxury. I mean, they make all manner of luxury goods, everything obviously from fine leather goods to they own Tiffany and make things that Tiffany sells as well. But watches are obviously a part of their business. And I think, a few things are going on at LVMH. First of all, they reported revenue on their first kind of 3 quarters of the year, and they're seeing about $7.4 billion in revenue for their watches and jewelry division. That's up year over year. So that's about a 2% growth year over year. It's one of actually the more resilient segments in their overall portfolio. So watches are an asset now for LVMH. In the past, I think the watch division has had its struggles. Now it's a source of strength and stability. That's great in the financial picture, but what you and I saw when we were at the GPHG in Switzerland was LVMH really kind of cleaned up there and did so in a lot of the fine watchmaking categories, which I find really impressive. I think a lot of people, when they think of LVMH watches, they think of Tag Heuer, Hublot, Zenith. But what we've seen recently is a real surge in the fine watchmaking from LVMH.
Yeah, I have a lot of mixed feelings about this. On the one hand, I'm glad to see that they're up from the perspective of the industry. Growth is a good thing, especially against the headwinds of this past year. I'm happy to see where Tag Heuer is going. I think their new leadership is very strong. Obviously, we have a lot of love for Zenith as a brand here. We love the people there. We love the watches there. And I think they've done incredible work when it comes to what the Daniel Roth relaunch, for example, where the watches are, frankly, absolutely magnificent.
Well, the Fabrique du Temps was the sort, which is Daniel Roth, Gerald Genta, and their high-end watchmaking maison within LVMH. They kind of cleaned up at the GPHG. They were on stage multiple times.
I think my reticence around it, and I reserve the right to correct this because I'm curious to see what comes of it, is how LVMH has inserted themselves into the independent watch world, which is less a story of their growth and more a story of how they intend to, I think. All right, let me put it this way. There's sort of 2 ways to look at it. One is the positive and optimistic way, which is that they truly believe in the innovation, creativity, and thoughtfulness of independent watches.
So we're talking here about their collaborations with independent brands, and then that what was
the LVMH Watch Prize,
and the LVMH Watch Prize. Got it.
That they truly believe in the innovation present in this segment of the industry, and that they recognize their outsized role as a multi-billion-dollar company, and they actually want to invest in the growth of that because they believe in the art form. I really want to believe that. My experience in the corporate world, however, makes me feel like it's probably a little bit more cynical, which is that they're just trying to buy credibility.
It's carpetbagging.
Yeah.
So I think they're doing what a lot of retailers are doing here, which is, we've talked about this on the pod in the past, is there are a lot of retailers who sell mainstream brands who are now looking to independent watches as a source of diversification and incremental revenue.
Yeah.
And if I'm LVMH and I look around me and my biggest competitors in watches are Rolex, who's undisputably strong, Richemont Group, who has Cartier and a number of other established brands. They've got an impressive watchmaking portfolio. The Swatch Group, similar thing. And I'm standing here with Tag Heuer, Bulgari, Zenith, and Hublot, and maybe some, more niche high-end watchmaking. I'm thinking to myself, I need more brands. I need to beef up here.
Yeah,
and I think they're doing that by basically trying to carpetbag in independent watches.
Well, so here's where I think we'll find out. I would have a little bit more optimism if the people they were partnering with weren't Kari Voutilainen and Recep Redzepi. The reason why I say that is like, if you really want to champion independent watches, I mean, that is like the absolute cheapest shot. And that's not a dig on Kari or on Recep.
Yeah,
what I mean by that
it's
is
a granny shot.
Exactly. Yeah, it's like, well, of course people are going to buy that watch. And I think we see that trajectory sometimes when, I see a client, for example, that's just moving into independent watches. What are the watches that they often call us about we're asking for? It's like a Simone Brett. It's a Regia Presepi or something like that, because that's what is at the top of the pile when you start reading about independent watches today.
FP Journe,
exactly.
Yeah, where are we with the LVMH FP Journe collab?
Yeah,
Let's go, guys.
I think he has investment from a competitor. That's why. But but this is what I mean by I'm going to reserve judgment. I'm really curious to see who they continue to award the LVMH award to and what they do with those people. Because there are some incredible watches nominated for that independent award this year. Some of whom, in full transparency, we retail, like Josh Shapiro and David Candell. And I'm curious to see A, who wins, and B, what are they going to do with that? Are they going to try to trade off the credibility of the watchmaker that they're supposedly lauding? Or are they going to take the giant communications, machine behind LVMH and the expertise and supply chain knowledge and access that LVMH can provide to help grow and scale their business? And are they going to do that in an attempt to then make an offer to that brand? Or are they going to do it because they, as they say, they truly believe in the creativity and ingenuity of independence? I don't know.
Well, what have they've done this watch prize for independent creatives in the past, haven't they? Like I think
this is the second or third year.
Okay, what have they done for them in the past?
I don't know.
What's come of it? Yeah,
not much that I can see.
Yeah,
but and there are some promises that they make about shepherding and offering coaching. And
so it's a 150,000 euro grant, a 12-month mentorship at La Fabrique du Temps, business support in marketing, legal, and finance, and a unique trophy.
Right. So
it seems like there's a lot to do. Of what seems to get the attention is the competition itself and who's entered and things like that. But it doesn't. I mean, look, it may be what they're offering here. I'd be curious to speak to someone who's won this prize in the past. It seems like what they're offering is more like internal support.
Which, like I said, could be really valuable. If you're a watchmaker, that doesn't mean you're a good marketer. If you're a watchmaker, it doesn't mean you have the time to develop some of the relationships. Or if I get introduced to a supplier by LVMH, or maybe even if I get to make a purchase for a certain product, certain calibers or something through LVMH, I don't know. Like, these are things that if I were an independent watchmaker, and I were doing something where a component that I needed could be added to a massive order for Tag Heuer, grossly reducing my cost because I won this award, that could be pretty cool. So my point is, my judgment here is reserved. I have no one listening to me right now will be shocked to learn that I'm a cynical guy.
So the last winner was Raoul Pages. And I don't, and which is great. I mean, he's an extremely talented watchmaker. His watches are beautiful.
Fantastic.
That was in 2024. I'm not really sure what's come of that.
We should get him on the pod and find out.
Yeah.
If he's willing. I mean, look, all this to say, and then we should move on. I want this to be important and I want this to be good because I want these corporations that see themselves as the mountains of the industry to also create opportunity without feeling like it must be shackled to them financially. I may be thinking too altruistically there, but who knows?
Well, I will give them credit on this. Let's say this is a cynical move to carpet bag with independent brands and all that. They sure have found a really clever way to get these brands, to get these independent makers to line up and show them their goods.
Absolutely.
So you got to give them credit for that. They have brought the mountain to Muhammad here, and they've got a line of who's who in independent watchmaking plying their wares.
Yeah, I mean, you could also
LVMH.
argue that all these watchmakers could say, whoa, it's going to cost you $150,000 per watchmaker just to even see what we've made.
Yeah.
But
it's interesting. It's a very different approach to what Chanel has done. Speaking of competitors who are taking investment elsewhere, Chanel's much more low key. Now, are they going out and taking crazy flyers and risks on the brands that they're putting investment into? Not really. They're generally making investments in established players like MB&F and others. Journe, I think, has investment from Chanel.
Mm-hmm. And we know of some others that are talking to them too. Yeah. Look, I think
But Chanel is not going out there. I think that the challenge of the LVMH thing is they're going out into the world and proclaiming to be these great patrons of independent watchmaking, which is very different from what Chanel's doing, which is much more low key. And they're not
Chanel is actual patronage of independent watchmaking.
They're not looking for credit.
No.
They're not looking for credit. No. So we'll see where this thing with LVMH goes. I'm curious to see, yes, if this prize for independent creativity in watchmaking does have some real teeth. Here's another winner in the world of watches, and this one really struck me by surprise. So we've talked a lot
this one actually makes me really happy.
Yeah, this is cool. Cool. So we've spoken about the pre-owned market. And the pre-owned market really being dominated by the big four, so Rolex, Patek Philippe, Audemars Piguet, and Richard Mille. They are driving the market as brands, but also the segment in which they sit, which is generally in the high end, is really driving the pre-owned market. Whereas the rest of the market and other brands and lower price points are really struggling and continuing to retreat. Now, this is nuts. So Business Insider ran this story, and basically it looks like Van Cleef & Arpels is the top value retention brand across watches and jewelry, with pieces trading at 112% of their original retail value and up. So this is up 9 percentage points year over year. So this places Van Cleef & Arpels, at least right now, as the top watch brand for value retention, which there's a lot behind this. But
sure,
one, this is kind of cool because one of our favorite things to do at Watches and Wonders is to go to the Van Cleef & Arpels stand. Yeah. They literally turn their stand into a museum of cool watchmaking. They have insane clocks and automatons and watches.
It's the automatons.
It's really cool. It's exactly what a booth at Watches and Wonders should be. You know, when you think about
it's an actual wonder.
Yeah, when you think about oh man, it would be cool to go to Watches and Wonders and go check it out and walk into these booths and see what's on offer. It's like that's what they're doing. They're creating this horological wonderland, and it is so cool to check that space out. Not watches we're particularly, at least in terms of our personal taste, interested in, but from a watchmaking and a craft standpoint, super impressive. And it's pretty much the only booth at Watches and Wonders that actually welcomes people in to come in and walk around and check it out. So very cool to see this. What's really behind this, though, is a shifting landscape, and this is very much connected to macroeconomics and things that we've talked about earlier in terms of an uncertain financial environment, where part of what's driving this is really Van Cleef & Arpels sits in the jewelry category. It's fundamentally a jewelry business. They are a jewelry brand that also makes watches. That's to take nothing away from what they're making. They have that very distinct point of view. But jewelry, it sounds like, is increasingly becoming an investment asset or a store of wealth these days, and these things are always changing. One day it's gold, one day it's watches. Some people claim Bitcoin is a store of wealth, but right now jewelry is having a moment as a store of wealth that could in part be because of the rise in prices of precious metals, which have gone up lately. So that's how this fits in, but it's kind of cool to see a brand outside of the big four and a brand that is doing something very different be rewarded, at least in terms of value retention, which isn't everything. And we always say watches are not investments. They're here for fun, but very unexpected. And this guy, I don't know why, but it kind of put a smile on my face.
Just because they make cool stuff. And I'm excited to see that, and I'm excited. And it's esoteric stuff. And, I think the people who buy it, this is a thing that you buy because you love it. And regardless of the wealth trend there, the things that they make are just cool. And it's exciting to see that, not to see that a 58 or 5711 is the benchmark.
Here, I'm going to preview our next episode. So our next episode is going to be our annual, next year watch prediction. So we'll do our 2026 industry.
No mailbag.
No mailbag here, people. We don't do a mailbag episode at the end of the year. We're not phoning it in. But yeah, so our next episode will be our annual 2026 watch industry predictions episode. And I'll give you a preview of coming attractions. One of my predictions is around jewelry watches. So in the last few years, we've seen this shift of focus and attention and buying from sports watches to now smaller shaped watches, stone dials, and things like that. I think the next move, and also at the same time, a shift to the high end of the industry as an area of growth. It's high end watches over $50,000 that are really dominating the industry and the growth of the industry. I think the next thing we're really going to see in the next area of growth and attention in the industry is going to be jewelry watches. So that might be crazy, but that's where I see things heading, and this is one indication that actually may be in the cards. So we'll see where jewelry watches go. Personally, I know nothing about jewelry watches. I'm fascinated by them just from a pure art and craft standpoint. Like they're kind of beautiful. I don't know anything about this stuff.
That would be Jeff. He's a gemologist.
Well, we should have him on here to talk about some jewelry and jewelry watches, because I find this a fascinating corner of the market, obviously from a business standpoint, but the watches are just plain beautiful and cool. Van Cleef and Arpels stuff, especially, I've got a real soft spot for. So we'll keep our eyes on that. Now, one watch, speaking of watches themselves, one watch we talked about in the last podcast, we were talking about some new releases from a business standpoint. We talked about the new Tudor Ranger. I think we kind of agree that it's a bit dull, but hey, if that's your thing, we totally get it. The other watch we talked about from a business standpoint, brutal, was the new, we've already been brutal on that one. The other watch we talked about from a business standpoint was the new Omega Seamaster Planet Ocean. And Asher, you did a thing.
Yeah, I got one. I put my money where my proverbial mouth was. I thought it was a pretty interesting watch. And, I think I said in the past, I've been a huge fan of the Planet Ocean. I've owned several versions of it. And a close friend of mine and listener of this podcast really endorsed it. So I picked one up. And the one I got was, and this was a deliberate choice, I bought the black dial orange bezel because that is, of course, the iconic look for the Planet Ocean. And I bought it on the rubber strap. The reason for me being, to me personally, the quintessential dive watch is just a no date sub. We don't need to get into that one other than to say that for me, I love it. And I didn't want to have a 1-to-1. I wanted to see what this could do on the integrated rubber strap. And what I would say is that in the metal, I feel like it does deliver on what I was hoping it would, which is a very clear and differentiated point of view on the category that feels unique to itself. And that's critical given that they are going essentially dollar for dollar on the bracelet model against a no-date sub. And the number one way to lose against a Rolex or a Tudor is to attempt to compete directly, like to do a storm the castle kind of full frontal assault on that watch. You're going to lose, just the business says so, unless you're not playing by the same rules and you're offering something different. And this watch, I have some nits here and there, but on the whole, I would say delivers very well on a distinct point of view. It does not feel like the Contrarian's Submariner, which I would argue the previous generation did. This feels much more like its own thing. It definitely leans more luxe than Tool in terms of its design, the facets, the heavy use of polished surfaces, but I'm really, really, really pleased with what they've done.
So one of the things we talked about on our Omega episode, the Omega-sode, I'm not going to let that go, was Omega really positioning itself against Rolex, not just from a brand standpoint, as sort of the number two in the market, the Avis We Try Harder, but also from a product standpoint. So I'm curious, like I totally hear you on, this is a fundamentally different watch than a Submariner. Like when I saw that watch on your wrist from across the room when I walked into the office this morning, it was like, the question was like, oh, what watch is that? Not like, what dive watch is that? It's so different and unique, and I mean that in a good way. So I agree. But let's talk about from a product substance standpoint, product quality standpoint. How does it stand up to like a Submariner?
Just like a quick rundown on it. The integrated rubber strap and the clasp are great. It is a miss that there is not a quick release system here for the bracelet and the strap. The strap is excellent. The bracelet, I suspect, is great too. I haven't seen one, but not being able to move back and forth is also not only is it a little bit behind the times, given what we expect from modern dive watches, Rolex notwithstanding, it's also, I think, a miss in terms of an upsell opportunity for Omega. The watch head, which is the best part of this watch, the angularity, the detail, the attention to all of the finishing on it really makes this watch feel luxe in that way. The bezel action feels a little clanky, loose, and rickety to me as compared, again, to the benchmark of a sub. I really like that.
I found the bezel action to be a real disappointment on this watch.
Yeah, but I find, if I'm being honest with you, I feel that way about all Omega divers. The last Planet Ocean was slightly better, but like the 300M, it's like it's just a very plasticky, ratchet wheel kind of feel. Now that said, I've spoken to plenty of people who prefer that kind of like loud click, 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 click. You can hear it here. Some people really prefer that to the Rolex more smooth feel. I get it. It's a personal taste thing. That's fine. That's how I feel about it. And then finally, and this is like the least of nits, but it is just a thing. On the positive, I really love that they did a closed case back here because, it's fine movement, great, whatever. But in fact, it's very strong movement. I love the fact that you can jump the hour without changing the time. It's a great feature. But one of my favorite features of the old Seamasters was the hippocampus in hippocampus. Am I getting that right?
Hippocampus.
The hippocampus in relief. And this one has this it's like ever so faintly etched.
It's laser etched.
Yeah, and it's
laser engraved on this.
I think honestly, it would have been better to just leave the case back empty, which would have been cool because then you could engrave it, which is a major benefit of Rolexes, by the way. There's not that many watches with closed case backs these days, which is kind of funny. But that is not a reason not to buy the watch. And all of these, I would say, are I'm quibbling around the edges of what I think is a excellent product. And Omega really did do a good job of differentiating this.
Yeah, absolutely. The more I see it, the more I like it. And, the beloved Omega dive watch is the Seamaster 300M, the James Bond watch. And part of the reason it's so beloved is because it's just so different. It's so unique. I mean, you hold that thing up to like a Submariner, which is the benchmark in the category. It's just very different. One of the things my wife hates that I do when we travel as a family is we're at an airport or wherever I might be, and I see someone wearing a watch, and I go up to them, and I'll be like, and it'll always be something very obscure. I'll be like, "Excuse me, sir, is that a Baltic aquascaff?" And the person who's wearing the watch is like, "Yeah, why are you talking to me?" But so much of what I see when I'm out there in the world looking for watches is I see these watches on people's wrists that all feel like they tread around the dive watches that feel like they tread around this territory of the Rolex Submariner. The Baltic Aquascaff is a great example of that. I love it. I think it's a beautiful watch. I think it's a great watch, and I actually would like to own one. I think the blue dial on the Mark I Aquascaff is just a handsome watch. But it treads, and so many, it's not a knock against that. Other watches we love, like the Manta Ocean King, they tread in this world right around the Submariner. Mm-hmm. What the 300M did that was so successful and so great and made it so loved was that it didn't. What something like a Doxa Sub 300 does that makes it so beloved and so different is that it's just so different. And finally, what we have here with the Planet Ocean is something that is just really different and frankly gives you a real alternative to a Submariner or a Sea Dweller. So good on them and good on you for putting your money where your mouth is. You're setting a good example.
Thanks.
Did you call up your watch dealer and tell them you were interested in the Planet Ocean?
I bought this from Rob Kaplan at Topper Jewelers.
Did you tell him you needed to think about it?
No.
You bought the watch. Good for you. The watch. All right, cool. You sure you don't want to think about it?
Yeah, now that I own it, yeah, I need to think. Yeah,
maybe. Well, congratulations, man! It's an awesome watch, and it was a treat to see that on your wrist when I walked in this morning, and it delivers in the metal on intellectually what we talked about when we first chatted about that a couple weeks ago. Congrats!
Thank you, and yeah, cool watch.
And hey, if you're out there looking for a cool watch, good luck to you as well. If you're looking for an independent watch, you know who to call. This, of course, is Openwork. It's a production of Collective Horology. You can find us and all those independent watches online at collectivehorology.com. And please get in touch with your questions, your feedback, your suggestions. And to do that, just email podcast@collectivehorology.com.